Today is the 9th of August 2010, and welcome to today's Silver Log. This is the SLV chart and some times and dates for tops and bottoms. May 5th, the big equity day. A lot happened that day, and it was the start or the big bottom for the range for silver. It took 1 week, exactly 1 week, to get to the top of 1933. And that's a difference of 2 2/3, which is a gain of about 15% in 1 week's time. And since the last, month of June, month of July, approaching 3 months, we have stayed within a range that we were in for 1 week. And that is a pattern we are seeing of higher lows and lower highs. This is a higher low and a lower high. Technically, it's another higher low, not by much, but still, that's 12 cents higher than 1694. And as of now, we are still at a lower high. We can still gain up to obviously 18, this area here, to make a lower high. And what I notice a lot of times when you are bundled in towards a specific range is that a lot of times the breakouts or breakdowns can be very volatile. And right now, silver's volatility is quite tame, but it is showing signs that it does want to break out, which would mean that it's not going to be anywhere near what it will be or should be or could be, but it at least could be a break or a change in the volatility, which has just been very dry right now within silver. When we look at the moving averages, I was stating on the silver log up towards this area here with all these averages, and there were even some more in that area too, that it was a big area of resistance. And what it needed to do was it needed to hold a retracement probably back towards the 1770 area. Well, obviously, that did not happen. It didn't hold the 1770, and it finally has managed to come back. It's gotten above it, and it's been support. Now, this moving average has went from 18 down to about 1790 something. Still, nonetheless, it is holding that 18 area very, very nicely. And the 18 and 17 does seem as if that's going to be the significant range. For if I look at Fibonacci upside potential on 17 to 18, what I do is I take 160 of it from 17. That would be 1860. So an area up towards here would be your next potential breakout if and when you do break the resistance point. And when we take a look at the next Fibonacci, or the next level between 18 and 19, which essentially was the range from May 5th to May 12th, or from May for a couple weeks anyway, that we have had more time, especially recently, on the lower end of this range. Or you have this range, and you have this range to the downside, and then you have this upward trend, and now we're starting another upward trend above it. But if we look at the time duration from this high to this low is June 4th to May 12th. That would be about a little over 3 weeks, and then 2 weeks and change from this low to this high. Now what we have seen is a move that took 5 weeks to get from 1894 to 1706, which is still, this high is lower than this low is higher than this, and it took 5 weeks. Since then, now it's been about today's August the 9th, so we're looking at almost 2 weeks now on what was 5 weeks. So we could be 40% in towards this intermediate run bull market. And within that, you're going to have moves to the downside, just like we had moves to the upside during this 5-week run. We had this move to the upside. We had this move to the upside. This one tried it a little bit. Obviously, there was this move. And that's going to happen within that trend. The trend would be on a downside, lower highs, lower lows. Here to be higher highs, higher lows on the way up. And we've already had one move to the downside, and that could easily get us to move up to that area we were talking about here, like 1870-ish area, pull back to 18. There would be the second move lower to 18, and then you go to 19. And then even when you do get to that point, we're still going to be in the range. It's when the range does break, whether it be August, September, October, November, December, or whenever, it's going to most likely be volatile. And the longer it takes, the more volatile it should get, because that builds it's almost, if you look at a mechanical issue with like the engine, it's like an overclogged issue, something like that. It's hard to explain, but what happens is there's more people that get involved within the trade, and what happens within the range is very important for both the short side and towards the long side. So thank you for watching today's Silver Log, and have yourself a great day.